So, what if I told you that one of the most strangely accurate market forecasting tools ever created wasn't built by some Wall Street genius, but by a farmer way back in the 19th century? It sounds kind of crazy, but stick with me.
Yeah, you heard that right. A simple chart, hand-drawn by a guy observing the price of pigs and corn, has somehow managed to call major market turning points for over a century and a half. The big question is, how is that even possible? So first up, let's talk about the farmer's prophecy. You see, the guy who made this chart, Samuel Benner, got completely wiped out financially in the panic after the Civil War, and he became obsessed, absolutely determined, to figure out the market's natural repeating rhythms. All right, so what exactly is the Benner cycle? Let's pull back the curtain on this 150-year-old pattern and see what it might be telling us about where we're headed.
Okay, at its heart, the Benner cycle isn't about day-to-day stock tickers. It's bigger than that. It's really a theory about people, about human behavior, and about economic seasons. Benner was convinced that markets just moved in these huge waves, driven by years of human panic, followed by years of, overconfident prosperity, and then, of course, the cool down that always follows.
And this is what those rhythms look like. You can see the waves right here. The bottoms, which he called panic, those were the years of hard times, and, according to him, the best times to buy. Then you've got the peaks, the prosperity phase, which leads to the top of the market. And in between, you have the contraction. But look over to the far right. Notice those dates: a predicted peak in 2026 and a predicted low in 2032.
Which brings us to our next section, our prosperity window. So the big question is, where does this old chart say we are right now, today?
Well, according to the Benner cycle, we are smack dab in the middle of one of those prosperity windows. This is supposedly one of those good times periods, a great time to sell and take profits. It's a phase that feels optimistic, where asset prices are generally rising. But, as the chart always warns, these good times don't last forever. And that leads us right here, to the 2026 expiration date. Because this 150-year-old chart comes with a pretty stark warning that our current run of prosperity has a deadline.
And the year that this chart has had circled for over a century is 2026. This is the next major turning point it's pointing to.
So what's supposed to happen then? Well, the chart predicts that in late 2026, our prosperity window slams shut. We'd hit the peak of the cycle, what Benner called Zone B, the best years to sell. And immediately after that, a long contraction phase is predicted to kick off, and it's supposed to last all the way to that next bottom in 2032.
All right, let's talk about navigating the coming shift. Now, look, it's really important to say this is a fascinating historical pattern, right? It's not a crystal ball. But just as a thought experiment, what kind of strategy does something like this even suggest? The advice you can pull from it is pretty direct. As that 2026 peak gets closer, the core idea is to start playing defense instead of offense, to rotate out of those high-risk, high-reward assets and into safer, more defensive ones. And here's what that looks like in simple terms. As the peak gets closer, you think about rotating out of what they call high-beta, speculative stuff. The exciting growth stocks that fly high in a boom but can crash hard. And you'd rotate into quality, defensive sectors. We're talking about the boring but steady companies, the ones that provide things we all need no matter what, because they tend to hold their ground better when things get rocky. So that's where we land, with a simple, almost folksy view of market history that has this, unnerving habit of being right. Now, of course, past performance is no guarantee of future results. We all know that. But it does leave you with one heck of a question. If a 150-year-old chart drawn by a pig farmer has been this accurate for this long, what happens if it's right again?